Okay, let's start with building your retirement accounts. 401k, you have a maximum contribution to your 401k of $23,500. That's if it's 2025. And if you turn 50 this year or have turned 50 in past years, you can go up to 30,500. Thanks to catch-up contributions. This money comes from your pay before taxes to lower your current tax bill. If your employer offers matching funds for your 401k plan, this is free money to you. This program encourages you to contribute the amount necessary to get the most matching funds that you receive. Simple IRA, this is another employer plan. If the employer offers this plan, you can contribute up to $16,500 in 2025 if you're under 50, with an additional $3,500 catch up if you're 50 or older. There are provisions to add even more depending on your situation. Both of these types of employer provided plans may have a Roth option, which is also worth considering depending on your situation. IRA or Roth IRA. Depending on your income and filing status, you may contribute to a traditional retirement account, individual retirement account, or a Roth IRA. You're allowed to take a tax deduction for your contributions to a traditional IRA up to $7,000 in 2025 if you're under 50, and this depends on your modified adjusted gross income. There's another $1,000 if you're 50 or older. Ditto for the Roth. But here's the thing, with both of those, there are income requirements, whereas the Roth or the 401k and the simple IRA, they do not have a maximum income. SEP IRA or solo 401k. It's for self-employed. If you have a side hustle or are self-employed, get a SEP IRA or solo 401k. These have higher contributions limits with the solo 401k, allowing up to $70,000 in 2025 based on your income. The more you contribute, the less tax you pay today and the more benefit in your future. You might lower your taxable income by investing in these non-Roth retirement accounts, 401k, simple IRA, regular IRA, SEP IRA. Anytime I cite the age 50, you're considered 50 for purposes of catch-up contributions for the entire year of your 50th birthday. So your birthday is December 31st and you turn 50 at the end of this year, the whole 2025 counts. Leveraging health savings accounts. A health savings account creates a potential tax break if you have a high income deductible or high deductible health plan. The money you put in an HSA is tax deductible, and increases in the account are tax-free. Then when you use the money for qualified medical expenses, it's also non-taxable. By the way, a health savings account is not the same as a flexible spending account. With a flexible spending account, it is generally use it or lose it. Health savings accounts are not. And caution about health savings accounts. If you're coming up on age 65 and still working, extreme caution should be exercised when and if you are signing up for Medicare Part A. An HSA contribution limit is $4,300 for individuals and $8,550 for families in 2025. If you're over 55, you can add an extra $1,000. They may seem like a good idea for today's medical costs, but the true tax advantage comes when you save the money and use it as a qualified retirement plan. You can also explore tax-deferred growth options. You might aim to accumulate as much money as possible while paying the least amount of taxes. Tax advantage investment accounts let you invest your funds in a way that eliminates taxes on gains. Some examples of this are annuities and cash value life insurance. And there are tax-efficient strategies you can consider. If you're fully funding your retirement accounts, you might consider these strategies in brokerage accounts. While these strategies don't necessarily provide immediate tax breaks that retirement accounts do, they can help manage the taxes you pay on your investment income. Capital gains tax planning. Long-term capital gains, gains held on assets held more than 1 year create less taxes than ordinary income. By holding investments for over a year, you may benefit from lower tax rates depending on your income level. Tax loss harvesting. This strategy involves selling losing investments to offset gains in other parts of your portfolio, reducing your taxable income. While this strategy is time consuming to implement, it's one way to manage the tax impact of a portfolio with appreciated value. Remember, the goal is more than just managing taxes. You want to work with a financial planner for future success. The earlier you start tax planning for your retirement accounts, the more effective compounding may be for your wealth. If you're not a do-it-yourselfer, there are managed accounts that offer a tax managed feature. Some will even do tax loss harvesting. The rules change frequently. A good financial planner will be up to date on the latest changes. If nothing else, the numbers change from year to year. Frankly, they'll think of things laymen will not. As a Henry, even though you may not have large amounts of money to invest, you may be able to afford the fee involved with getting a financial plan. Think of a financial plan as a GPS that not only helps chart the course, but may warn of hazards ahead. The financial planner is like the navigator on a ship, helping you avoid or mitigate hazards along the way. So, once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, most important question is, am I saving enough and is it in the right place? When you're on that glide path to retirement, which I define as the last 10 years prior to retirement, will the USS Retirement be shipshape on the appointed day? Retirement, how do I avoid running out of money before I run out of life? And legacy, does what I worked hard for get to where I wanted it to after I'm done with retirement? That can be reached at herwirefinancial.com. I do in-person, Zoom, and phone appointments. I am licensed and registered across several states and can easily add states if there is a need. If you'd like to schedule an appointment, click on that schedule an appointment button in the upper right-hand corner of my website. Want to see more videos like this? Go to the YouTube channel. It's that red button, 2 buttons over from the scheduling button. By the way, that's where you'll find that how to deal with market turmoil, because you definitely need a plan for that. Please like and follow me on Facebook, LinkedIn, Twitter, and like and subscribe to my YouTube channel. For those who prefer the good old-fashioned telephone, my phone number is 518-631-2569. Do not text that number. You and I will be sad because I won't get it. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance referenced is historical. No guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax, legal, ERISA, or investment advice. Consult your advisor prior to taking any action. Unmanaged index returns do not reflect fees, expenses, or sales charges. Index performance is not indicative of the performance of any investment. Investing in stock includes numerous specific risks, including the fluctuation of the dividend, the loss of principal, potential illiquidity of the investment in a falling market. Investing in mutual funds involves risks, including possible loss of principal. Fund value will fluctuate with market conditions, and it may not achieve its investment objective. Dow Jones Industrial Average, comprised of 30 stocks that are major factors in their industry, widely held by individuals and institutional investors. Standard & Poor's 500 Index is a cap-weighted index of 500 stocks designed to measure performance of the broad domestic economy through changes in the aggregate market value of 500 stocks representing all major industries. NASDAQ Composite Index. It measures all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. The market value, the last sale price multiplied by shares outstanding, is calculated throughout the trading day and is related to the total value of the index. Everybody have a blessed weekend, and just remember, nobody tunes into the Weather Channel to see a sunny day. So I expect this to eventually work itself out. I just don't know when. Have a terrific day.